Greetings everyone, I'm Michael and this is Credit Kuri, where we talk about credit finance and investments. In today's video, we're going to talk about how to get a low interest rate on a private student loan. Your student loan interest rates dictate how much money you will pay the lender each month and over the lifespan of the loan, making it one of the most important terms to consider when borrowing money for college. The lower your interest rates, the less money you'll spend on financing charges during repayment and vice versa. College costs alone are enough of a burden on young Americans, so it is important to get the lowest interest rate possible if you need to borrow a private student loan. Here are 6 ways to get a competitive student loan rate so you can set yourself up for financial success after graduation. Number 1, work on building your credit score. Private student loan lenders determine your interest rate in part based on your credit history. The higher your credit score, the better your chances of locking in a low student loan interest rate. It can be difficult to get a competitive rate if you have less established credit history. Here are a few steps you can take to improve your credit score. If you're taking the measures to raise your credit score to above 740 or above, then you'll be eligible for some of the most competitive student loan interest rates. With very good or better credit, you may be able to get a low interest rate on student loans without a cosigner. Number 2, apply with a cosigner. Many college students, especially young undergrads who don't yet have an established career, haven't had the opportunity to build a credit history that can guarantee the lowest interest rates possible. In this case, it may be best to enlist the help of a cosigner, such as a trusted friend or relative. Ideally, your cosigner should have very good or excellent credit to help you qualify for the lowest student loan rates possible. Be smart. Your cosigner will be equally responsible for repaying the loan, so you'll need to make sure you're capable of making monthly payments, or the burden will fall on the cosigner. Many private student loan lenders offer a cosigner release clause, which allows you to remove the cosigner from the loan after making a set number of on-time monthly payments. Choosing a lender that offers a cosigner release may make it easier to find someone who is willing to cosign on your student loans. Number 3, shop around for multiple lenders. When it comes to borrowing a private student loan, shopping around can pay off. Most lenders let you pre-qualify for a soft credit inquiry, which shows you the estimated terms without impacting your credit score. You can pre-qualify with multiple lenders to compare offers so you can find the lowest interest rate for your financial situation. Once you choose the loan offer that is best for you, you'll begin the application process, which will result in a negative but temporary mark on your credit report via a hard inquiry. Pre-qualification won't hurt your credit score, but it doesn't necessarily guarantee you'll be approved when you formally apply. Number 4, see whether you qualify for interest rate discounts. Check with private student loan lenders whether you're eligible for a discounted interest rate. Here are some common types of student loan rates discount offered by private lenders. Number 5, choose a shorter loan term. As with most other loans, student loan interest rates tend to be lower for shorter term loans than for long-term loans. If you can afford the monthly payments on a 5-year student loan rather than a 10-year loan, you could potentially lock in a lower interest rate, get out of debt faster, and pay less money over time since you're paying more towards the principal each month. Number 6, start off with a variable rate. Private student loan interest rates can be either fixed or variable. With a fixed interest rate, your term stays the same while you repay the loan. And with a variable rate, your interest rates and monthly payments can change over time based on broader economic conditions. While fixed interest rates offer more stability in the long term, variable interest rates often have a lower initial rate, allowing you to save money in the short term. Depending on the lender, your variable rate may adjust monthly, quarterly, or annually. Before choosing a variable rate student loan, be sure to read the loan agreement carefully to fully understand the risk and stay out of default. If you're worried about your variable rate rising, you can always refinance to a fixed rate student loan down the line. Most student loan lenders don't charge fees for refinancing, so it doesn't hurt to use this strategically. However, you will need to apply again for refinancing, which will impact your credit score. That was our video. Do you currently have student loans? If so, please share your experience in the comments below. Thanks for watching and enjoy your day.